On ET now and on to the high risk and low risk ideas from our experts, starting with Kunal. What are your ideas for viewers today?
Well, two buy calls, expecting that the stock specific move for many of the sectors as well as for many of the individual stocks they would continue. So two buy calls. First one, which I'm suggesting, is about Bharti Airtel. Now, after quite some time, we are discussing Bharti Airtel on the bullish side. I think it's given a classical breakout about this 560, 565 hurdle. It's a triangular pattern breakout, a bullish flag pattern breakout on the hourly charts, as well as I think there is a slight degree of outperformance which is surprisingly coming in for Bharti Airtel after quite some time. So I think on the backdrop of it, with slight, I would say staggered but consistent, almost a consistent kind of momentum coming in for Bharti Airtel, I would expect that the stock should move up to at least a level of 600 over the near term. So buy with a target of 600, stop loss to be kept at 540 approximately. And the second stock is about UBL, United Breweries. I think it's a very, very interesting chart. On the intraday time frame, that's on the 60 minutes chart. It's forming a classical bullish parent formation. The breakout for this pattern is approximately 80 rupees on the upside. So I'm expecting somewhere closer to 1270, 1280 is where the stock should be heading in the very, very near term. Buy with a target of 1280 approximately, and stop loss could be kept at 1170.
All right. Thanks so much to everybody who's tuned in live. We'll be starting the query segment very soon. But before we do, Sharmila, what are your high risk and low risk ideas? And we can keep it brief, because we're already seeing a lot of queries piling up.
So my low risk idea is HCL Tech. We've seen the numbers, and I think a couple of weeks back we had this as a query on the show, and I'd said that buy post numbers. So numbers have been announced. They are not. The numbers are not too great, but the outlook is very strong going ahead. So I would buy this stock now with a target of close to 1200. My high risk idea is Tata Consumer Products. We've just seen the numbers, and the numbers were a bit of a miss. And we have seen that exceptional loss, etc., play out for Tata Consumers. So given that, the stock will correct a bit, and I think this correction will give us a good opportunity to buy the stock. Here, my target would be you could expect a upside of about 10 to 15%. So those would be my two ideas.
All right, thank you for those ideas, Sharmila, and keeping it really brief also. All right, let's kickstart with our query segment then, and let's bring on board our first viewer query, and this is from Manoshi Gupta, saying that's purchased Graphite at Graphite India 50 shares at 752 rupees per share. Wants to know the technical view on this particular stock and whether at what level should he look to add more of the stock. Kunal, what's your view on Graphite India?
I think you've bought at the exact current market price of the where the stock is trading right now. It's been a fantastic last 3 quarters for metal names, and for the commodity stocks as well. Graphite is one of the stock in a similar category from a level of 180 to 100. 3 quarters back, the stock has come back to 750, 800 levels. Its lifetime high is 1100. So if the trend is here to sustain for stocks like Graphite and I think it's immediate pure HEG, then both these stocks they can see another round of upside, say closer to around 250 rupees on Graphite. That would be approximately 30-35% from current levels for the stock. So I would suggest a hold, but provided there are two important catch over here. One is that you are able to digest high beta volatility or high volatility action into these kind of names, because the stock has a tendency of going to 10-20% on the upside pretty smoothly, and even going through a very similar corrective phase on the upside. And the second important point is that you are ready to hold on to it from a slightly medium term to long term view. I think if both these criteria are set, then you can hold on for at least a target of 1000 plus on Graphite.
Okay, the next question is coming in from Shubh Mathur. Shubh has gotten into AU Small Finance Bank, and I think at slightly elevated levels of 1,178. The stock is currently trading at around 930, and therefore he's incurring a loss at this point. Sharmila, coming to you on this one, he's asking whether he should average at this point of book losses. Are you convinced about the business model of AU Small Finance Bank? Would you say that he should stay invested?
Yes, I think he can stay invested, but I am personally not in favor of averaging. And the stock price had corrected. It had its own set of reasons to correct. But the kind of numbers that they've delivered, as well as the outlook going ahead, would make me think that he can stay invested in the stock, because I would expect the stock to rally from current levels. So my advice would be to hold.
All right, our next query is an email query coming in from Babu from Bangalore saying that he's holding OnMobile Global. The quantity is 800 share which he's purchased at 112 rupees per share. He wants to know what sort of a target can he look for in the month of May. Kunal, how are the charts looking for OnMobile and what sort of target can he actually look at?
So I think my sense is that he's looking out for very short-term kind of targets. If he's looking at what the stock would probably do for the month of May. For last 3 months, I think the month of March and April, the stock has been absolutely sideways. The good part about the chart is it's holding on and hugging on to the 50-day moving average. So I think at current levels of 102, 103, it's just about nudging towards or touching towards this 50-day moving average. This apparently has been a good support for OnMobile on the charts in the near term. So we can expect that the stock can hold on to this kind of support level. So you can hold on to it. But my sense is that maybe the stock would remain sideways, maybe rally up into 108, 110 levels. But it's not showing any kind of a great volume pickup. So trends may start for OnMobile, maybe over the next couple of months. So you have to be a patient investor if you're looking at, reaping some good rewards on the stock price. And if time frame is at your convenience, then I believe you should look at least 3 month to 6 month kind of a time frame for the stock to really justify the breakout in the volume patterns which it had shown in the month of February. So if your time frame is long term, say medium term, 3 months to 6 months, then I would suggest hold on mobile.
Okay, I want to come back to you on this one, Kunal. We've got an interesting question from Sahil Mathur. And what he's asking is, why is Reliance behaving a little differently from a large number of its blue chip peers? And perhaps you have an answer on the charts because it has displayed a bit of weakness since its earnings not too long back, right?
Absolutely. Alex, in fact, just a week or two back before Reliance was scheduled to come out with its quarterly results, I was mentioning this pattern for Reliance Industries as well on the channel as well, that how the stock has a tendency of rising up, rallying up, some 7-8%, 100 odd rupees, 120 odd rupees just prior to its results, and post its results, you see the stock going through a corrective phase. So I think it's not a different pattern this time around as well for Reliance Industries. Now the question is that when will this underperformance end? I think it's anyone's guess. When will this underperformance end for Reliance Industries? But then it's a quality blue chip name. So at times for a quality blue chip stock, time is something which has to be considered, and patience is something which is very very important and required. So one can it's difficult to anticipate when that breakout will happen. But I think if one can hold on to it from say a couple of years of perspective, then I think buying Reliance Industries at 1900 levels, 1900, 1940 levels where it's trading, I think is a fair price to buy the stock. Given that kind of a time frame, I would expect the stock to retest that 2300 levels over the next 1 to 2 years.
Next query is coming in from Pranav Dangi saying that he wants to know whether he should buy CARE ratings for the longer term at current levels. What's your view on CARE ratings, Sharmila? The stock has definitely seen a good performance over the last 1 month, but for the longer term, how does CARE ratings actually look for an investment?
Yes, if it's an investment and it's a slightly longer term investment, then definitely this is an attractive price. And as you said, overall, I think going forward, the numbers are expected to be better. And I think what we must keep in mind is that all the developments that we've had over the last couple of years seem to indicate that rating agencies will have a greater role to play going ahead. So, business prospects also for rating agencies seem better. So yes, I think he can go ahead and buy it, but the only caveat is that he needs to be a long-term investor and wait for things to unfold from here, and then the stock will give him good return.
Okay, the next question is on the liquor stocks really, and we've got a question from Sagar on the technicals of it. He's mentioned United Spirits, but I think I'll expand it to the rest as well, Kunal. On the technicals, which should one pick?
Well, I will go with UBL United Breweries. I think it's a much more better stock in terms of prospects, pure chartically and pure technically. I think I will probably give that stock I would say slight better advantage as compared to United Spirits. So United Spirits is a quality stock. It has a very good longer term history, but somehow the last 3 months I remember specifically just prior to budget 2021 that was 3-4 months back. I think just prior to that is where the stock lost its way from levels of 660, 665. It had went through almost 100 rupee, 140 rupee correction from those levels, and somehow it's been unable to lift off from those corrective phases. But UBL, on the other hand, I think has been showing a lot of promise. It's trying to break past about a lot of the technical patterns time and again, converting the short-term rallies into trends, into decisive trends. So those are ingredients of stocks which form classical uptrend stories. So I would give UBL more strength as compared to United Spirits. I think if you're looking at it something from a momentum perspective, then you can expect at least a 10% upside from current levels on the stock price.
Our next viewer query is from Sri, saying that he's bought 25 shares of BASF at a price of 1,814 rupees per share. Wants to know what's the view on BASF over the short, medium and longer term as well, whether he should continue to hold on to this particular counter or look to book profits at current levels. Sharmila, what's your take on this counter, BASF?
BASF. Is that right?
Yes, BASF.
Yeah.
BASF
So this is a stock that I do like, and this whole space is actually doing fairly well. So I think if he's a longer term investor, he can definitely stay invested. And so for me, it's a hold at this level.
Okay, coming back to you on this one, we've got a question from Rajiv, and he's a long-term investor. He specified that at the onset, Sharmila. He's got 55 shares of IndusInd Bank at levels of 1450. He's asking whether to hold or exit because he's considering switching to stocks like CDSL or MCX or CAMS. Would you suggest that he hold on with a 5-year plus perspective?
The stock at this current price, definitely he can continue to hold. But, in that list of stocks that you were reading out, I do like CDSL as well. So that is definitely a stock that he can also consider. But yes, I think if he already has bought IndusInd Bank and he wants to continue to hold it from a longer term perspective, then definitely he can continue to hold IndusInd.
All right, our next query is coming in from Seems Kumari. Wants to know whether it's a good time to buy Bandhan Bank at current market price. What's your take on Bandhan Bank, Kunal?
Not attractive as such. I think it's been an underperformer. When you try and compare the list of private sector banks and then you try and look at the large cap ones, the mid cap ones, Bandhan Bank falls to be amongst the mid cap stocks and the ones which are amongst the low performers. So you look at it in the last 4-5 months. That when large cap names like ICICI Bank etc. they've corrected 15-20%, they've shown signs of bounce back quite strongly. These stocks have managed to just about hold on to their 200 moving averages, but Bandhan Bank has been reeling below its 200 moving average, I think, since the last 1.5 month, let alone the downward pressure the stock has seen from those 420, 440 levels, which is very, very recent over the past 2-3 months. So it's been a stock which is showing signs of weakness. I would suggest that maybe some bit of pain is still left into the stock price on the downside. If you can wait for another 5 to 10% correction in the stock price, I think then it becomes an attractive buy, not at these levels.
Okay, I'm going to take the next question from Sagar, who's an old-time viewer. Thanks so much for joining in, Sagar. Always a pleasure to take your questions. He's got 1,000 shares of Lupin at levels of 1,040 and 1,000 shares of Sun Pharma at levels of 600. He's looking at levels of possible levels of 1,400 for Lupin and 750 for Sun Pharma. Kunal, is that possible on the charts?
Possible for both of these stocks. They were big underperformers as compared to the other pharma majors, and I think it's time that many of these pharma stocks would probably try and cover up the stronger degree of underperformance which these stocks have shown. Typically, when a sector moves, the first move of the sector is led by solid quality large cap names. Then comes the mid cap stocks where there is a lot of anticipation that these stocks can give beta. And when the market gets exhausted with these kind of names is where you see the underperforming stocks, whether it's the large caps or the mid caps, even they find their own spate of rally. So I think Lupin and Sun Pharma have been relative underperformers as compared to the other large cap peers. But I sense now that the underperformance is getting covered up. And in that aspect, you might see another 10 to 15% rally in both of these stocks. So possibly your target range on 1400 on Lupin and 750 approximately on Sun Pharma should be achieved.
All right, our next viewer query is coming from Parveen Kumar Bharadwaj, who wants to know the view on Make Money Organics is what I'm gathering from his basically message on YouTube. What's your view on this particular counter, Sharmila, Make Money Organics?
Yeah, this is a counter that I've been tracking for a fairly long period of time, and we've really seen it take off over this last year or so because of the whole China plus one playing out for chemicals as a space. So now I think they're a fancied part of a fancied sector, and they are seeing we are seeing that play out in their stock price. So yes, it's a stock that I like, and definitely I think he should stay invested.
Okay, we've got AB on YouTube who's got Symphony at levels of 1111. Kunal, he's asking for a short, I'm assuming AB is a guy, is asking for a short-term view, about a month.
Well, I think from a short-term view, I would suggest that the stock may remain in a range. It's not done much in last 2 months. In fact, has gone through a downward drift from 1500 to 1100. 1100, 1110 where it's currently trading right now. So it has very good support at 1060, 1080. So it's just about nudging very close towards its support level. So what could possibly happen, I would sense that it may try and test its support level. You may spend some time over there, and once demand comes in back again, you might see the stock coming back towards that 1150, 1200 zone. So I sense it may just about remain in a range 1100 plus or minus 40, 50 rupees for the good part of the next couple of weeks.
Next viewer query is coming in from David John, and he's asking whether it's good time to enter IT sector, especially companies like Oracle Financials, given that significant revenue of the company comes from outside the country. Sharmila, I'll pose this question to you. IT space, definitely global economy is recovering slowly and steadily, given that some of the countries are actually reopening post their COVID wave. So does it make sense to invest in companies like Oracle Financials?
To just comment on IT as a space, I think very many times on the show I've said that the two sectors that I like the most are IT and Pharma. So yes, IT is a sector that you should look at. Now, unfortunately, OFSS is not a stock that I track too closely. My favorites are HCL Tech, TCS, Infosys in that order among the large cap. And among the smaller companies, smaller or rather mid-cap companies, there are a whole host of companies that I do like. If you want a really niche play, maybe you can look at a stock like a Tata Elxsi, given the kind of niche offerings they have across verticals. Another stock that I like is Persistent Systems. That could be a stock that you could look at. Zensar Technologies is another stock that I like. So I think there are a whole host of stocks. I'm sure OFSS is also. If he studied it and he's comfortable with buying it, then it's fine. But I personally don't track it.
Kunal, Tata Steel, clearly a stock that has been buzzing in the recent past, but Pawan Kumar is asking for a view on the Tata Steel May call.
I don't know which strike he is looking at, but if it's specific, has he mentioned any strike, Alex?
No, he hasn't mentioned.
Okay. So I'm assuming that he must have taken the position maybe yesterday or day before when the stock was just about at 1080, 1100 levels. So I think if that's the case, and if you're slightly in the money with your profits on Tata Steel, then I would believe that these are good times to take out profits over here, or at least what at best you can do is, assuming if you're holding on to a call option on Tata Steel, then have cost as your trailing stop loss, or try and increase your trailing stop loss. The concern with many of these metal names is not the ferocity of the uptrend. The concern for many of these metal stocks is that in technical parameters, the RSIs are getting to an extremely overbought zone. So a level of 86, 88, 90 RSI on many of these metal stocks are being seen. So these are very tricky zones, because at these points of RSIs, there is possibility that momentum can continue and can accelerate. But if there is any kind of a reversal or any kind of a negative news flow which happens into these metal stocks, the sell-off could also be far more intense from these names. So rather than building fresh positions, I would suggest that have a trailing stop loss mechanism, and you can ride the uptrend till the time it lasts for many of these metal names, including Tata Steel.
The next one is for you as well, Kunal. We've got a query coming from Raghupati. He wants to know what's the entry price for PI Industry. He wants to add this particular stock in his portfolio. Wants to know at what level should he actually go ahead and add PI Industries. How are the charts looking for PI?
Very stable, quite attractive charts for PI Industries. I think over the long term, it's done pretty well for itself. In fact, in the last 7-8 months, the stock has not even broken below its 200-day moving average. So that's the solidity of the trend for PI Industries. Now, as a classic entry point, I would suggest 2,400, 2,450 as a good entry point. But the concern is that you might have to wait for a couple of weeks or at least a month or more for the stock to come back to that attractive territory. So if patience is something which you can adhere to, then I believe 2,400 levels or thereabouts could be a good starting point for PI Industries. And if you can hold on to it from a longer term view, then I believe averaging on every 200 rupee dip on the downside could again be a very good strategy.
Okay, this next question is for you, Sharmila, because I think Ankit, in a sense, defines long-term investor. He's been holding on to Godrej Consumer, he says, since the year 1990, and he's asking whether to hold or to shift to the metal sector.
He's holding it since 1990.
That's what he says.
I think he must be making a lot of money on Godrej Consumer, if my memory serves me right. So yes, I think he can, if he feels he's made a lot of money, he can definitely divest part of it onto metals, because that is sort of the sector that is trending. But honestly, I like Godrej Consumers, and again here, as we were speaking of, we've spoken of a lot of such names today. We've spoken of Marico, we've spoken of Dabur, I've spoken of Tata Consumer Products. So the stock which I liked for the longest time before Tata Consumer Products was actually Godrej Consumer. So here again, the kind of profile that they've built and their whole approach to taking their business to the next level has always been something that I've liked. So I would honestly stay invested in Godrej Consumer, but if I had additional flows, I would look to deploy that in metals.
Next query is from Ritesh Garg. He's saying he's bought BHEL May call, but its put call ratio changed from 0.5 to 0.47 has actually started to frighten him. Kunal, what's your view on this BHEL May call?
So, I think if I'm not wrong, the stock has just entered into the ban list yesterday, on the futures on the FNO side. So that may probably lead to some shedding of positions on the stock price. But if it's specific towards the May call option, then I believe you can hold on to your options over here. So even though the PCR ratio, the put call ratio has dropped lower for BHEL, but I would sense that you have to try and mix up PCR or put call ratios, such derivative ratios, with some sort of technical breakouts as well, because technical breakouts is where the prices will probably get the first impetus on the move, and put call ratios would probably give you more of a supportive role. So I think for BHEL there has been good support at 55, 56 levels. So I think if the stock holds on to this level of 55, 56 for the next couple of days, you can expect one more round of breakout on the upside, and that could probably boost your call options which you're holding.
Okay, on that note, thank you so much, Kunal, as well as Sharmila, for taking the time for answering the questions that you did answer. I'm going to have to apologize to our viewers who've tuned in and who haven't had their answers given, because we are heading into a conversation with the management that is important to take right now. Thank you so much once again to the two of you for joining in. In fact, we are waiting on with Amit Agarwal, who is the Group CFO of Raymond. Thank you so much, Mr. Agarwal, for joining in. Just want to start by asking you, given the resurgence in cases of COVID-19, consumer sentiment has definitely been impacted. And would you say that you are back to where you started last year, given the localized lockdowns and restrictions that we're seeing right now?